Come on now.
All right, sports fans, welcome to the Big Skinny with Lou Basenese, and I am Lou Basenese. At least I think so today. If you're wondering what the Big Skinny's all about, we're about all filling, no fluff for financial and investment news. If you're one of those nerdy wonks that loves a Merriam-Webster definition, I'll give you the Urban Dictionary definition of the Big Skinny. It says it's insider information, and we are absolutely not that. I love the orange and blue of my Florida Gators, but don't love the orange of a state penitentiary uniform. So we're not giving you inside information, but we want to give you inside perspective, or the essential truths beneath the headlines. You know, I like to say I consider myself, or I'm aspiring to be the Dave Portnoy of pizza reviews, but for financial and investment news. I mean, everyone knows Dave, right? His one bite, everyone knows the rules, except Dave seldom takes just one bite. He takes a few more, and we're going to apply a similar rubric here. We're going to cover one headline that is making the rounds and being repeated that you should either ignore or pay special attention to. We're going to cover one key chart related to that headline that is going to give you the most important data behind what most likely is a contrarian take. And then we're going to end with one investment insight. Each week we cover that in 3 different ways, 3 different topics for that rundown. Then every show we also feature an upcoming trend or company or technology that you should absolutely have on your radar and possibly be buying. Today, I'm going to be upfront and tell you I own the company we're interviewing the CEO of. I've been buying more, so tune in for that. It's going to be in our second block here today. After that, we bring in a market pro because I know that you have to either be humble in the markets or be humbled by the markets. So after doing this for 20 plus years, I've got a lot of friends that are humble too, and we've taken our lumps and bruises and also had a lot of victory laps, and I think it's best to share those perspectives and insights with you today. And today we have arguably what I believe the man, the myth that will become the Warren Buffett of MicroCaps, Ian Cassel. Really looking forward to him coming on the show. And then we finish up, we wrap it up with some Q&A and some interaction, some audience interaction. So please do not be shy at any time to chime in, share your comments, join the conversation. We're live on all the socials. You can punch in a question at any time and get some quick, instant internet fame when you do. So with that being said, I want to start today's rundown of the 3 things you really should be paying attention to in this market. And the first one might be a head scratcher for you, like cyber pimps, Lou. Yeah, people be pimping all your data on the internet, and that's a big problem. Obviously, if anyone's had their identity stolen or their bank account compromised or debit card compromised, you know how much of a pain that is and how costly it can be personally. But when we talk about this on a global level, a corporate level, it's a huge market, right? And this week we got news that Google is making a huge acquisition of cybersecurity firm Woes for $32 billion, and instantaneously, right after that, everyone fancied themselves the best cybersecurity stock picker in the world. You got a headline in Forbes saying, hey, these are the 6 cybersecurity stocks you need to buy now. Ironically, you read in and say, all right, well, what's the rationale? How are you picking this? And it's actually a hilarious filtering process. They took all the cybersecurity stocks and then weeded out the foreign ones. Any ones that didn't have more than 10 analysts covering them, as if that's some magic number. Got rid of ones that ended in Y and began with the first letters of the alphabet. It, again, not seriously, but it was about that ridiculous to whittle it down to 6 cybersecurity stocks that are going to be great winners. I'm sorry, folks, I don't have enough capital to invest in 6 cybersecurity stocks, nor do you. I don't want to take the single stock risk, and here's what I'm going to tell you about cybersecurity. There is absolutely no way you can pick one stock that's going to be the biggest winner, and that's simply because the cybersecurity attack surface area is expanding exponentially. It's in numerical terms that we can't even comprehend because it's happening on all areas that we don't even know. Think about it, from network interfaces to mobile devices to USB ports to websites, software vulnerabilities. There are so many different ways that you can become a victim of a cyber attack, both corporately. And if you look at the activity of cyber attacks, on a weekly basis, they've roughly doubled. We're talking about over almost 2,000 cyber attacks every week. Talk about the economic impact. This is literally tens of trillions of dollars of economic impact. It's impossible to guess which company is going to be able to corner this market because no single company is. So that really brings us to the money chart for cybersecurity. This is an ever infinite expanding market. We're talking about data being created, stored, launched, shared, snapped, everything tweeted, X, Truth even. reaching almost 200 zettabytes. Now, for those of you math geeks out there that know what a zettabyte is off the top of your head, congratulations. Most of us don't. I had to look it up. 1 zettabyte is equivalent to 1 times with 21 zeros after, or 1 trillion gigabytes. So we're talking about a massive amount of data. That is how much is being made vulnerable at all times. So I'm not going to try and make the investment here in a single stock. I love to play the growth trend with an ETF. The best way to play this is, yes, an absolutely buy recommendation. It's been in my portfolio for close to a decade already. It's the Hack ETF. HACK, appropriately named. It was the first one. Gives you exposure to 25 leading cybersecurity stocks. It adjusts and rebalances every quarter, brings in new and emerging players. Since there's no silver bullet solution, this is the best solution for your portfolio to play this super growth trend. So moving on from cyber pimps and cybersecurity, there's no gain in biotech without some more pain, unfortunately. If you look at the biotech sector, it goes through cycles. It's extremely cyclical, and we've been going through a winter that is unlike many others here. The Boston Globe describes it as unleashed lab space, plunging valuations, layoffs. The slump is taking its toll. Yes, but I am here, folks, with hope, because there is hope in the biotech space. There's hope because of the drugs being developed are going to save lives, improve the quality of lives. And that doesn't stop just because the investment performance has not been great. And if you look at the IPO class of 2024 and 2025, it's a lot of red ink in IPOs. But what's interesting to me, we're about 3 months into the year, there's still IPOs coming in 2005 in biotech, which means the investor sentiment is turning. If you look at the 2024 class, I think the average IPO that came public in the biotech space in 2024 was down 54%. That is from the IPO price. That's a tough market to come into. But again, I want to lead with the upside to some of the downside. And I think this is really important here. If you look at our money chart, one thing that has maintained consistency through whatever the market swings have been doing is patent filing activity in this space. And patents always precede profits. Because especially in biotech, if you don't own the patents, it doesn't matter how good your data is, you're not getting through the clinic without getting knocked off. So yes, if you look at the price performance of the XBI ETF, the biotech ETF that has a little bit more bias to the small side, it's not been great. It's actually treaded water for the last decade. But I'm here to tell you things are changing. And I'll give you a prime example. Pull up the ticker of Chimerix on your screen, and you'll see this is a company that was trading for sub $1 that went and got taken out for $8, right? Innovation pays off. The paydays come as these stocks and these companies move through the clinic and get the data. How many people here would like to wake up one morning and see a stock for trading for $1 go to $8 in short order? That's me. Sign me up. That is the potential. Some of my biggest winners have been in the biotech space. I expect that to continue, especially when you focus on microcaps. And that is the third topic and headline. Of smaller caps, microcaps, they all get lumped in together. When you look at the main Wall Street financial press, they want to just dog and just give them a bad rap. You want to know why? The main reason why is because it's the only area of the market where we, the individual investors, actually have an edge. So why give them credit and highlight where we can actually outperform the markets? And here we go. Bloomberg, top of the charts here. Small cap stocks gloom deepens as executive sentiment sours too. I'm sorry, I don't share that. I don't think many small cap CEOs, including one of the ones we're talking to today, is going to say that their sentiment is souring about their prospects. But the numbers are the numbers. Large caps have outperformed small caps for a considerable time here. The last time we saw a huge rally between small caps and microcaps was coming out of the COVID lockdown, shutdown, where small caps and microcaps from the bottom within 3, maybe 4 months were up 150 to 175%. Give me some of that. That's what we need, and that's the potential here. And here's why I love microcaps and why we're always going to focus on microcaps and small caps here to some degree, is if you add it up, Wall Street gives no love, absolutely no love here. Doesn't matter if it's Valentine's Day, any day of the week, doesn't matter. You get no analyst coverage. The average microcap and small cap has less than about 5 analysts covering them at any given time. Then there's actually a huge swath of these companies that have absolutely no analyst coverage, which means we can actually have an edge there for doing the work. And the coup de grace here in terms of microcaps and small caps over any other caps is the performance. I mean, if you just look at it, you have a better chance to go in on a small company that gets really big and the returns over time multiply and add up and have the most impact on your wealth potentially. And we're going to do our job here at the Big Skinny to keep bringing you compelling microcaps and small caps all along the way. So that's the rundown. Before we get to our first guest, I want to encourage you, if you're not signed up for our newsletter yet at thebigskinny.com, please go ahead and do that, where you're going to get served up right to your inbox the same simple winning formula. One headline that you should probably ignore, one chart that gives you the data and the backup to be a contrarian, and one investment insight, including individual stock recommendations or companies that should be on your radar and the developments to be watching for. So go ahead, and if you haven't signed up, scan that QR code, go to the website, and we're going to take a brief pause for a word from our sponsor, and we'll be right back. And we're back to the Big Skinny with Lou Basenese, and that guy on that screen before us was not skinny. Gotta love the new graphics coming in from my boy Dodd, always keeping me on my toes. Never know what's next, and maybe there's another surprise this issue. But hey, I want to tell you what's next right now, and this is one of the more compelling biotech companies that I've come across. It's not by random that we are sitting here interviewing the CEO of Gain Therapeutics. This is actually a company that I've known for the better part of a year and a half to 2 years. I'm an individual shareholder. And to put it simply, they are developing drugs that can have a very meaningful impact on some of the most difficult to treat diseases that are in existence. I'm talking about things like Alzheimer's, Parkinson's, and other unmet medical needs and names of diseases that I can't properly pronounce. So it is with great pleasure that I get to welcome the CEO of Gain Therapeutics here to talk in more specifics. Gene, it is a pleasure to have you join the Big Skinny. Welcome.
Thank you so much, Lou, and I really appreciate you giving us some time to talk about Gain.
Yeah, no. Hey, where in the world is Gene today? That's what I want to know, because I'm a little bit jealous. So tell our audience.
So I'm in Milan for a board meeting. We are an international company, so we have operations in Barcelona, Milan, and Lugano. So Milan's an easy place and convenient for us to meet quarterly for a board meeting. So that's what I'm doing now.
I'm jealous as a fellow Italian. There's some other Italians around. I'm coming to the next board meeting if it's in Milan. But
okay, well, hey, so just by the way, Gene is actually short for Generoso. And Mack, I don't know how they got M-A-C-K out of whatever last name we immigrated over with from Italy, but
I love it. Well, we're here with Generoso and Luigi Basenese Terzo. So let's get into this and talk a little bit of biotech, mix things up. Bolognese and biotech, who thought they'd come together? Listen, Gene, I gave just kind of a brief overview. If I'm an average investor, I wander to your website, I read something called, Unfolding the Next Generation of Allosteric Small Molecule Therapies, and I'm like, all right, man, you go to sleep, which is, look, you're appealing to the scientific audience. So in layman's terms, tell us what you're doing, and then we'll go from there.
So we're trying to affect proteins in a way that can improve their function, and all proteins have a function in our bodies. So it's just a very scientific way of saying we want to improve the function of key proteins that are responsible for promoting cellular health, and that's what we're doing with our discovery platform.
Right. And so we bring up on the screen here, and I know this is available in your investor presentation for anyone that's listening to this on a replay later, is really this idea that a lot of diseases can be caused by mutations that impact how proteins are synthesized and then transmitted throughout the rest of the cells downstream. I like to think of this as a very, because I'm a simple guy, the analogy is if you ever had a garden hose that got kinked and the water stops flowing.
That's incredible. That's
So-
exactly the metaphor I'm going to use, because you can kink the hose, but that water still has to get out.
Correct.
And that's a really good metaphor.
So, well, I'll take credit for it from here on out. I don't accept payment in shares, but no. Look, this is how so proteins get misfolded through genetic mutation. And again, I want you to elaborate on this. This is my understanding, and then you kind of elucidate it more. Proteins get misfolded. There's downstream effects of that because those proteins give clues to the rest of the body on how it's supposed to function. And then it has all these kind of knock-on effects that cause disease. So if you can unfold that protein and restore normal function, is it possible to reverse a disease? Is it just restore, where you're at? How does that work?
Yeah. So let me get to the mechanism of what we're trying to achieve here with the biology. So what we're trying to do is what we developed is a drug we think will be disease modifying for Parkinson's. And just as you said, we're trying to get to the underlying biology to fix that. And the underlying biology here is misfolded proteins. We all have proteins. Our body transcribes proteins all day long, every day. About 30% of our protein transcription winds up getting defunct, misfolded, and degraded, maybe prematurely, but we can manage that because we're healthy individuals without gene mutation, without other comorbidities or other factors that are impairing our health. In patients with Parkinson's disease, there is an enzyme in the brain that is not functioning optimally. It's called glucocerebrosidase. It's a mouthful.
Wow, I'm not saying that 3 times.
Yeah, something might appear. It's called GCase for short. So it's the GCase enzyme. So this GCase enzyme is really important. It performs a lot of important functions in the cell. Many cellular compartments. A cell is composed of many cellular compartments, and they all need to be functioning. If one of them goes down, it's just like any other operational unit. If something malfunctions, it's likely that the whole operational unit might be impaired by that. Well, that's what happens with neurodegenerative diseases. Something in the cell is failing, and it might be broad enough to cause multiple things to fail. And then that's cell death, and then you have neuronal death, and then you have malfunction.
Right. So you're coming in and developing drugs, small molecules, so pills that can be administered to reverse this misfolding, right? And then
yes.
I guess, yeah, so let me, because this is what I always focus on in biotech, right? Data is what it's all about, right? If you don't have good data, you can't survive as a biotech. It's not about going to find a customer. If you don't have good data, i.e. the drug isn't safe or doesn't work, so you're out of business. There's no arguing about that. So talk to us a bit about the early stage data and what's the next data that we're looking for here to kind of give you those clues that, hey, we've got something here that could really be profound.
Yes, great. So where we are in development is we have taken our compound through to safety and target engagement validation. So what we've demonstrated so far is that our lead compound, which is right now called GT02287 or 287 for short.
Yeah, when it becomes approved, you'll come up with a really hard name.
Exactly. No, we're already doing that work. We're actually already doing that work, and naming a drug is not a trivial exercise. We can cover that in another conversation, but it's not trivial, and we're doing it now. But where we've gotten to this point is that we've been able to demonstrate that the compound is safe and well tolerated, and it also is modulating or activating, increasing the activity of its target, which is GCase, that enzyme I talked to you about.
Right.
It is an enzyme that is implicated broadly in Parkinson's disease. And if you can increase its activity, it maintains the housekeeping that prevents Parkinson's symptoms.
And then in your animal models, right? Because I know, and then you studied the animal preclinical first. What was the impact when you activated this enzyme? How quick was the impact? Again, I'm not making the.
So this has turned every key opinion leader and it's turned every key opinion leader and expert in the Parkinson's field kind of like on their back heels. What we've seen in the preclinical animal models is that when we model Parkinson's disease in these animals, and then we introduce GT02287, we see a dramatic recovery in their functional improvement within hours.
Wait, so I want to make sure everyone heard that. You're saying, again, full disclaimer, it's in animal models. That doesn't it doesn't always translate. That's the risk we know here, but that's the precursor step before you get into humans. Within hours, you're seeing functional improvement in terms of just physical response improvement to the
mice. Within hours, mice are able to hang on to wires for longer periods of time.
Some mice in my apartment can do that too. So here in New York,
they can walk. They can do all these physical tests close to the control animals, the ones that are not impaired, with our drug within hours. And so that is a little bit jarring to the field because we're being cautioned by so we rely on key opinion leaders and we rely on experts in Parkinson's to help us understand and develop the strategy for developing the drug. So we share the attributes we see in the preclinical models with key opinion leaders. We say, what do you think? How should we treat patients with this? What do you think the right endpoints are? What do you think the right dosing duration is? We ask them about every aspect of trial design to help enrich our clinical trials. They have all unanimously said, you cannot expect a human being who's had Parkinson's for 3 to 5 years to experience the same functional improvement so quickly. You're going to have to dose a long time.
Yeah.
But our view on that is, okay, we can't promise that. We can't promise that functional improvement that quick. But also,
if it happens, it'll be known.
The world was flat until it was proved to be round.
That's a good one. Yeah, you're right. And no, look, I think that's the potential here because look, there's other biotechs I've been involved with where it perfectly translates from the animal models into humans. So if it happens here, it's a complete paradigm change. I do want to, before we run out of time, there's a question here that came in that I want to make sure that you can advance. Here from Matt Brown. Do you observe any downstream effects like inflammatory effects in healthy volunteers in the phase 1?
Excellent question. So we believe there isn't. We haven't characterized it fully yet. We need to do more work, but we have run inflammatory panels on our healthy volunteers, and we saw some very unique changes in the inflammatory patterns. We need to back that up with more data. We need to understand it a little bit more because we don't want to spitball to the general public. We want to understand it first before we present what the case is. But there is something that's going on that's making us question whether or not Parkinson's is caused or affects inflammation. And that is something that's debated in the field. And we think our drug might be able to tease that out, actually.
Yeah, no, that's interesting. I mean, look, these are the things like you look at the development of CAR T therapies, right? Cytokine storm, where you broadly activated the whole immune system. You get these downstream effects that end up, in some cases, unfortunately killing patients. So these are the things that are critical. I want people to understand that there's a lot that goes into it. I love your more conservative stance here of saying, hey, we see things. We're not sure. We want to validate that before we start broadcasting it. Before we kind of wrap here and end with what we need to be focusing on as investors as kind of catalysts, we got another question for you. Did you get fast track from the FDA for the preclinical and phase 1 results? I don't remember seeing that, but just the question.
We haven't approached the FDA yet. We plan to do that on the back of the study that we're currently conducting in actual Parkinson's disease patients, where we can see when the functional improvement takes hold. Yeah. And then we can go to the regulatory agencies and say, this is what we're seeing from from a mechanistic perspective, what can you do for us in order to, what can we all do?
Right.
Because the FDA is engaged, like we all want to bring new therapies to Parkinson's patients. The wind is at our back from a regulatory perspective. We just need to show them that data.
Yeah.
Once we have something from this phase 1B study that we're
And then
currently,
when are we going to get the data? Is it a mid-year readout? So there's some interim data that we'll
we're
get
going to
in the
have
middle of
initial, so we'll have initial read in the middle of this year. It's likely the end of June. So because we need this data to inform our phase 2 trial, the next trial that we're doing. So
Right.
we're going to be happy to share that with investors and potential partners to show our progress, and that will be in the middle of the year. Yeah,
Okay.
likely
Well,
end of June.
listen, everyone, be paying attention. Gain Therapeutics is a stock to check out. Gene, I'd love to have you back because there's so much more we can get into here. I mean, you have the backing of the Michael J. Fox Foundation, a lot of other key opinion and policy influencers, obviously interested for the right reasons here because this could be a paradigm shifting treatment in terms of Parkinson's. But the other thing I want to make everyone aware of is that you have a platform for drug discovery that is AI based, that is helping identify these proteins that are misfolded, that could be unfolded in unique ways. So we'll save that for next time in Italy, as long as you promise me that. We're coming live from Italy next time you come on.
Absolutely.
All right, Gene. Hey, enjoy the rest of your trip. Safe travels back, and everyone, be paying attention. Put Gain on your radar, and we will certainly keep it on ours here and keep you updated with everything going on.
Thank you so much. This was way more fun than most of the spots that I do. So thank you.
Woo! I like it, man. That's the best endorsement we can get. We try and have fun, but be informative too. So I'll chalk that up as a win, man. Thank you again. We're going to pause for a word from our sponsor and then take a quick break and be right back. Looking for top quality, fully custom golf polos and lightweight quarter zips. Oh, I know I am. I don't like those finance bro vests that overpopulate New York City here. Well, guess what? Butcher Golf has you covered. Take your brand, promotion, or special event and bring it to life with full cut, end sewn customization, starting from a blank canvas. Order as few as 25 or as many as you can imagine. Delivered right to your door in 21 days or less. That's right, 21 days or less for fully custom golf polos and quarter zips. Butcher Golf, fully custom, really fast. Visit butchergolf.com today and mention that you know Sweet Lou Basenese and you're going to get a 25% discount. After this, we're going to be right back. We are back to the Big Skinny with Lou Basenese, and I'm just as excited for this segment and interview because I'm not kidding here. You know, it's hard to brag about yourself, but it's easy to brag about others, especially when they're successful and super accomplished. And there is no other way to describe Ian Cassel. So welcome, Ian, to the program. You, my friend, are the co-founder of microcapclub.com, which I'm sure most people know because you have a gajillion followers on Twitter. You're a big deal in India as well, which we'll get into. And then you also have your own hedge fund, I believe. You're in a money management business because you've been successful. So, Ian, good to have you.
Thanks for having me on, Lou. You and I have been good friends for a long time, and I appreciate you being a good advocate for the microcap space as well. We need more of you.
Yeah, no, hey man, listen, you tried to teach me early about story stock, so we can have a friendly conversation here. But I want to focus. First, the question is, how the heck did you get into microcaps? Like, what was the genesis for you, the aha moment where you're like, hey man, this is where I can make a serious impact as an investor, as a father, as an American citizen, all those above.
Yeah, I mean, I'm a little bit of an oddball. I mean, to date me, I'm 44 years old, and microcap investing is really all I've ever done, since I was 21 when I was in college. And it really all started during the dot-com bubble, technology bubble of the late 90s. I was in high school at the time. My parents gave me around $20,000 for my college education. They put it into a brokerage account with their financial advisor. They said, this is all you're getting, so you do what you want with it. You decide if you want to go to a expensive college or no college or wherever.
Wow.
And so, yeah, I ended up
Lancaster Community College, or were you at Harvard? You could have paid for Harvard.
Exactly, pay for half a semester. And so I ended up slinging that 20,000 into three small cap tech companies back then, and that would have been 1997. So 1997, graduated 99.
Perfect timing.
Exactly. All of those stocks 5x, turned 20 into 120. Thought luck was skill. I thought I was gonna be the next Warren Buffett and move over Grandpa. And it just didn't work out that way. Obviously, it was 150% luck, but I did get bit by the greed bug during that time period, and went right from there into undergrad and worked for a financial advisor as well part-time when I went to school full-time. And so I went down the other side of that dot-com bubble crash, and that 120,000 turned into 8,000, kind of got baptized into the microcap space, so to speak. Some of those small cap tech names became microcaps. And, I was just kind of like, what am I going to do? I have $8,000 left. And around that time, I started looking at microcaps in earnest as a starting point. And one of the companies I looked at was a company called XM Satellite Radio, which would later merge with Sirius Satellite Radio. And back then it was a story stock. It was a 176 million market cap company that had 2 billion in debt, launched a bunch of satellites up into space, had very little OEM subscribers, and Ford and GM were just about to sign up with them. And it was a story, and I loved the story. And I saw the CEO was going to be presenting in New York City. And this, again, I was a sophomore in college at the time, and I took a bus from Lancaster, Pennsylvania, Amish country, 3 hours up to New York City, weaseled my way into a one-on-one with Hugh Panera, the CEO at the time. Eyes were as big as saucers. I don't even remember what we even said, but long story shorter is,
I'm just an Amish kid from Pennsylvania trying to get ahead, man.
Just looking at me straight, but I ended up buying the stock, $8,000 at $1.78 per share. Feels like it was yesterday.
Wow.
And the stock was 42% held short, the float, and they started signing up GM, Ford. They refinanced their debt. Stock went from $1.78 to 34 in 2 years, and made the money back. And from that point forward, when I was 21, I kind of got bit by the microcap bug, and it really was just the ability for a moron like me, a college kid, to sit across the table from a CEO and have a conversation.
Yeah, but man, this is the thing I love about you. You're humble, right? You're a moron like you that got on a bus in the early 2000s, late 90s to go to New York to roll up your sleeves, to do the work, to press the flesh with an actual CEO and go, hey, there's more to the story here, which I think, I mean, what are your thoughts on? I look at just lazy analysis that goes on in the large cap, mid cap space, but microcaps, why I love it is because I know that if I go on the adventure, there could be a really good reward and treasure, unlike anywhere else in the markets. I mean, how do you look at research and getting conviction behind a name?
Well, and it's not, to add to your point, the reality is the greatest stock pickers, especially in value investing, they started in microcap. They started their careers as microcap investors, from Buffett to Lynch to Joel Greenblatt, these people you read about that now are managing billions or hundreds of billions if you're Buffett. They started down here for a reason. And you said it in your opening remarks before, it's the only area in the public markets where the smaller astute investor has an advantage over institutions. And it's an incredible advantage. It's a structural advantage that's been around for 100 years and will be around for another 100 years. And it's what attracted me originally to it. And it's just that the cool thing is, anybody, whether you have $500 in your Schwab account or, $5 million, the full opportunity set is open to you, and you can just look through the companies, and we all invest differently. I'm going to invest differently than you, Lou, and a bunch of other people invest differently than me. You have those same flavors of investing down in microcap as you have in large cap. You have folks like yourself that are very good at focusing on biotech, life sciences, and you have other people that are deep value investors, and everybody in between. And
it's true. And look, I think that's the uniqueness of it too, right? I mean, this is how you and I kind of hit it off originally, just looking at the world differently and learning from past successes and failures together. I wanted to just before I give you a chance to tell everyone how they can benefit from all the work you've done, is kind of pick your brain. Like for you, when someone brings a new ticker to you and you look it out, what's like an immediate red flag where you're like, man, I'm never putting a penny red cent behind this stock? I've got a few for me, but I'm just curious from your side of the market, like what are just deal breakers right out of the gate?
Now, usually when I see self-serving management teams, that's usually number one. I mean, and it's true for public and private companies. The smaller the company, the more important management becomes. I mean, the moat of any of these small businesses, yes, IP can be a moat, and it really comes down to the management teams that are unlocking that value of that IP or that product or service. It comes down to the management team. And so I spend a lot of attention evaluating the management teams of the businesses that I invest in, number one.
Yeah, so management red flag, so let's fast forward, you go visit some guy and he's out at a conference in Vegas in the strip clubs all night and gambling. You're probably not going to put any money behind that person. So.
That is correct. And it's funny, it's the same thing probably for you too, Lou. It's like some of those things, like when you're younger, when you're inexperienced and you see some of that flashiness, you're attracted to it. When you're younger, and then the older you get, the more you realize, no, that's not good.
Yeah, the older and the broker you got on some of those bad plays, because you're like, oh, he's not that bad of a guy. Let me put some money behind him. Well, hey, we got I think we've got a reader comment here. Ian, what's the microcap stock with the best risk reward in your opinion? I'm going to save you here because I know you don't want to give individual recommendations, but why don't we pivot this to where can people find out where some really compelling microcaps with risk reward setups? Because if I recall correctly, microcapclub.com has profiled at least 250 plus multi-baggers. So how do people get involved at microcapclub.com?
Yeah, and thanks for taking me out of that question. Appreciate that. But so microcapclub.com is a website I founded in 2011. And from 2009, during the depths of the GFC, to about 2019, I was just a full-time private investor, just living off my portfolio and balance sheet, supporting myself and my family. And during that time, started this website. And it really was, I just wanted to see what other smart people in my niche of microcap investing, what they liked and why. And so really all Microcap Club is a private message board or forum. And we have around 280 of probably the best stock pickers on the planet. It is a global community that are really just trying to unearth all of these great companies that are in every global market around. In fact, about half of all global equities are microcap companies. And so you can be part of the community one of two ways. Number one, and the first way is free. You submit an investment thesis on your favorite microcap stock, 2 to 3 pages. Every month, the membership base votes on the quality level of that thesis. You get enough votes, you get in. If you don't, you don't. Or you can just subscribe for an annual fee and be part of the community that way as well. And so, yeah, to your point, I mean, since 2011, around 1,200 companies have been profiled across the globe on our platform. Those discussions are happening. It's a very active, small community. And we've unearthed, I think, 254 now multi-baggers since inception. And that is not some high watermark in those equities that randomly occurred 5 years ago. That's literally from where they were profiled to where they closed yesterday.
Yeah,
and so that's over one per month.
That's real results, real transparency in a side of the market that doesn't always have it. I love the community aspect of it. You can't get voted off the island, can you, in Microcap Club if you become a member or for poor performance?
There's some participation rules, so as long as you're active and producing, content and being, adding to discussion, you'll always be a member.
Listen, I want to thank you. We're kind of running up against the time block, but I want to encourage everyone to go to microcapclub.com. I believe you guys have a microcap conference coming up in conjunction with Planet Microcap. Listen, there is more good. If nothing else, go, and you probably follow him already. Follow Ian on Twitter, X. I can't ever call, Meta, it's Facebook, and X is Twitter forever and forever. But
Me too.
Follow him there. He has great insights. Always is really bringing the truth, which I appreciate, and is always a straight shooter. So, man, good to have you as a friend, but even better to have you on the show today.
Thanks, Lou. Appreciate the opportunity.
Thanks. All right, we're going to take a break. Your ad should be right here. Today's episode of The Big Skinny is brought to you by your investor relations firm's missed opportunity. Let's be real. Who needs to reach investors, decision makers, and finance nerds more than you? You spend all day crafting the perfect message to attract shareholders, but are you sharing that message right here with our highly engaged, market-obsessed audience? Your ad could help us upgrade from gas station coffee, finally hire an intern to fact check us, and replace our producer's laptop before it crashes mid-show. Yeah, uh-oh. Did we do it? So don't let this golden opportunity pass you by. Email info@thebigskinny.com and put your IR firm exactly where it belongs, in front of people who actually care. We'll be right back. Welcome back to The Big Skinny with Lou Basenese and Dodd Forrestal. We're in the Dodd block. Welcome back, my friend. Good to have you.
Good to be back, Lou.
Yeah. Hey, this is the time of the show where I relax and let you do the work. I have a PBR, baby. Haven't had one of these in a while. I get a shot of
Lou,
beam with it.
I brought my beer this time. Last
cheers.
Felt a little jealous. Cheers, brother. So, I was noticing that this is our third show, and as they say, third time's a charm. I think we're doing pretty well, man. I think it's going pretty well. And I just I don't think anybody's chasing us with torches yet or anything crazy going on. So what do you think?
Give us some time, man. I'm sure we'll offend someone. I think I pissed off Ray Dalio and guys, the Gloom and Doomers one time. But no, listen, we're going to constantly iterate. This is what everyone here watching needs to know. We're going to try and keep getting better every week in and week out. We want to hear from you. This is the time of the show where you can feed your comments in. We're going to introduce something new too, because I want to make sure that we follow up on the bold contrarian positions we take when we're right and when we're wrong. So at this time in the show too, we'll do questions, but then we'll also do a quick rundown on things we've talked about recently. And 3 shows in, that's not a ton, but there's still some updates. So I'll let you kick it off here, man. Don't hold back, and everyone else, fire up the Pat Benatar and hit us with your best shot with comments so we can answer before we close out this hour.
All right, Lou. Well, like you said, this is the time we kind of go back through and see how you did over the last little bit here on those points. So I'm thinking that if you get one of these wrong, I think you should chug your beer. And if also if you get them all right, it's only proper that I chug mine. So
all right, sounds fair. Let's go.
That's not a good deal. All right. So the first thing, semi slowdown. Like, what's going on? Is there back up on 95 that got your jockeys in a wad? What's that about?
It's supposed to be a showdown. It's been supposed to be guns a-blazing, but yeah, we had the correction, and a lot of those chip stocks, got kicked in the can. I should have known it. I bought NVIDIA and knew it would be the top. I was late to that, but here's what everyone needs to know. Semiconductors are not as cyclical as everyone wants you to believe. There is demand for semiconductors that's through the roof. The last year, semi growth was up 19%. I like buying the dips here. I'm not wrong. I don't think we're falling off a cliff. Year over year, this is a growth industry. It's the oxygen of the digital economy that we live in. Chips, no slowdown as far as the eye can see. 1 trillion plus chips all day long, every year, every day.
All right, good deal. I guess +1 Lou. All right, more bad feeling. Who's crying now? What's happening?
Yeah, man, listen, we talked about sentiment last week. It didn't matter who was measuring the CNN Fear and Greed Index, the AAII Sentiment Index. This one comes from Charlie Bello, where he actually takes the bearishness minus the bullishness to get a reading. And it's hitting extremes again, which for me is like, hey, we said last week when people get this extreme that, when everyone thinks alike, everyone is likely wrong. Like, they're wrong on the bearishness, and we saw that. I mean, think about how the markets were getting just obliterated when we were doing the show last week, and here we are. We're back in the green. We haven't recovered everything, but sentiment has totally changed, yet investors still haven't caught up with it, meaning they do the wrong thing.
All right, good things to come then. Let's go. More bad actions is what? Arnold make another bad movie? Like what's happening?
It's not a tumor. More bad actions. Here we go. Yeah, no, listen, look, sentiment's bad, which leads to dumb decisions. We covered this. We implored everyone last week. Don't be stupid. Don't be punting your stocks into this market. The sell-offs turn into rallies really quickly. But if you looked at the data for what happened in terms of equity flows in the last 2 weeks, last month, last 2 weeks when it was the absolute worst time to sell, you saw people, everyday investors, just pulling their money out of the market hand over fist. And that's just bad actions, bad outcomes. Don't do it. I'm 3 for 3, by the way.
All right. Well, I've noticed 3 for 3. I better, start now. Insider information. Now, what's going on here, man? You don't want to be in an orange jumpsuit. What'd you do?
Yeah, I didn't do it, man. I'm not giving it. I didn't give it out. I didn't get a subpoena from the SEC this time. I'm just kidding. No, insider information. Here's what's the most important telling point, the most important tell in the market for me right now. And I brought this up today when I was on Varney and Company on Fox Business. They asked me, what bullish buy signals are you seeing out there? Here's one. Insiders are buying. In the dip that we saw in the last 2 weeks, insider buying activity popped higher. That's significant. Famous quote from Peter Lynch. If everyone doesn't know him, you should. He said that, look, there's plenty of reasons why insiders can sell. There's only one reason for an insider buy, and that's because they think the stock price is going up. So look, forget who's feeling bad, who's acting bad. Insiders are acting as if there's absolutely no recession coming. They see that stock prices are down and they want to win to the upside as operators of those companies. So yeah, that's some good insider information, if you ask me.
Yeah. Is that 4 for 4 then? Am I keeping track here?
4 for 4, brother. And we got 6 minutes left. You got a little bit of time to chug a beer. And hey, get your questions in if you're watching us live. We'll cover anything as honestly as we can. Join the conversation in the chat on whatever platform you're listening to us on or watching right now. So what's the last one before you chug a beer?
Bonds know best. Now I'm telling you, man, if you pull an Octopussy reference into the next whatever you're about to say, but whatever's coming out of your mouth, I'm chugging 2 beers.
I can't. I don't even know if I remember enough of that. I thought you were going to go Barry Bonds.
Come on, Roger Moore, best Bond out there, right?
That's a debate for another show, but I thought you were going Barry Bonds. He knew best by taking steroids because it's not a bad thing. Yeah. No, listen, bonds know best. Remember, last week we talked about the uncertainty index that was out there. I forgot to give credit. It just didn't come up to Michael Cantro for his fiscal uncertainty, economic policy uncertainty. This is another chart coming to us from Apollo's Torsten Slok that's showing the same thing, this uncertainty, but what's not rallying with the uncertainty is the credit spread. So bonds are not reflecting that same fear. And look, credit investors are usually smarter than equity investors. They sense peril and pending doom much sooner than the stock markets do, but we're just not seeing that yet. So again, gives us comfort. The good news here gives us 2-part good news. One, gives us comfort that the markets are not about to roll over because of some impending financial collapse or recession that everyone was warning about. The other good news is that this really doesn't count as a win for me. That's a push, right? It's to be determined still. So we both get to sip a beer at our leisure as we finish out the show.
We got one final comment.
Absolutely.
We do. We have a comment coming in.
Uh-oh.
Uh-oh. Here we go. Lou, in your first I am alive, no I'm not dead email, you talked about a premium membership. Can you tell us more about this? What it means to bring, for example, when will it be up and running? Yeah, we talked about this a little bit in the first show. I've learned from my days of being just an exclusive microcap investor and research provider that you need a more holistic approach, and that all the trends that I follow for the microcaps reveal opportunities in mid caps, small caps, large caps, in ETFs. We talked about the hack ETF for cybersecurity today. So the way we're going to run the premium subscription that is forthcoming within the next 30 to 45 days is to have a multiple portfolios. So there'll be a trading portfolio that can be all caps. It's just finding opportunities in the market, that these will be opportunities to make anywhere from a minimum of 25% to 50% and occasionally 100% double your money on disconnects in the market, like we saw with Apple in 2014, going back about a year ago as well. But yeah, that'll be all over the place. We'll explain that. But then we'll also feature kind of a 10 baggers of tomorrow portfolio with companies like Gain that could really change the outcomes. A little bit will go a long way. And I think that's the one thing I've learned the most. It's really helped people understand how you asset allocate. We all get excited by great story stocks and microcap stocks that could go up a cajillion percent, and we put too much money in them. And then when they go down, we're feeling the losses a lot more. So look, I want to give examples of individual companies, but they'll be forthcoming. If you've been a longtime subscriber, people that were Disruptive Tech Research subscribers, you're going to be automatically opted in. We'll provide more details, but I want to do it right this time in terms of learning from what we, it wasn't that we were neglecting anything. I just didn't think about it holistically of, hey, if all we talk about is microcaps, then how can we be surprised when everyone puts way too much money in that? So we've got to cover the spectrum, cover the trends, and really provide a service that I think is more beneficial to everyone that is looking to speculate in these markets. So if you haven't already and don't want to miss out on that forthcoming premium membership or future episodes of The Big Skinny Show or our newsletter that comes out about 3 times a week on days that we don't tell you about, so it always is a surprise when it hits your inbox, sign up now at thebigskinny.com or scan the QR code on your screen. And please don't be shy. We want to know how we can do better, be better, drink more, make more money. So fire away. Info at The Big Skinny. We're here for you. Dodd, any last closing remarks? I leave it to you before we sign off for another show.
Man, just great seeing you again. I wish I could be in studio with you again, with all the guys. Is that great time? And
yeah, we got to get another camera when you're here, because then everyone will figure out that I'm 5'2" and you're about 8'9". So
it looks like I'm.
You're not invited to the studio just yet, again, my friend. No, we'd love to. We'd love to have you back. We'd love to have everyone here back next week, Thursday. That's right. I got it right today. Thursday, not Tuesday, at 2 p.m. Eastern. Thank you all for tuning in.